Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. On the final trading day of 2025, the US dollar is holding steady near 98.25, close to its lowest level since early October, and is on track for its largest annual decline since 2017. The dollar has fallen 9.4% this year, reflecting a turbulent period that began with the disorderly rollout of tariff policies under President Trump. Markets are now focused on the appointment of the next Fed chair, expected early next year. WTI crude futures slipped to around $57.3 on the last day of 2025, driven by persistent oversupply concerns. Investor attention is now turning to the upcoming OPEC Plus meeting, geopolitical developments, and US inventory data. OPEC Plus is widely expected to extend its pause on supply increases into the first quarter of 2026. Geopolitical risks continue to offer some support, including US restrictions on Venezuelan oil shipments, renewed instability in the Middle East. With most global markets closed for the New Year holiday on January 1, trading conditions remained thin. Gold settled lower on Wednesday, but still posted a remarkable 64% gain for 2025, marking its strongest annual performance since 1979. On the final trading day of the year, spot gold fell 0.6% to $4,318.67, while silver plunged 6.7% to $71.36. Short-term price action has been pressured by profit-taking, though the long-term outlook remains constructive. The yen weakened toward 156.7 during thin holiday trading, extending losses from the previous session as investors assess the impact of Japan's expansionary fiscal stance. The cabinet has approved Prime Minister Sanae Takaichi's record $122.3 trillion budget, aiming to balance aggressive spending with debt control by limiting new bond issuance. However, Japan's fiscal position remains a concern, with public debt exceeding twice the size of the economy, constraining the government's policy flexibility. Euro turned positive on the daily chart on Wednesday, finding support near 1.172 during the European session and trading slightly above 1.174 as US markets opened. The dollar's rebound has lost momentum, while upcoming US jobless claims could inject some activity into otherwise subdued year-end trading. From a broader perspective, the euro remains on track for an impressive 14% annual gain, underpinned by monetary policy divergence between the ECB and the Federal Reserve.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.